Okay, let's kick things off. Okay, my name's Brad Gilbert and welcome to the Forex Trading Made Simple presentation. Now, the whole basis of this is to give you some bit more understanding around the simple trading principles that you need to follow. Now, my experience, I started at Citibank back in 1990, would you believe, back in Sydney, and I was moved on to London about 95, over to New York in 99. Then I was back in Sydney in the 2000s to head up the Commonwealth Bank team, and then also ran the Asian trading desk for TD Securities. So I've got a fair amount of experience in this area to sort of give you a bit of advice and a bit more understanding. So coming back to yourselves, okay, you're either new to FX trading, an experienced FX trader and looking for a refresh, or keen, but you just don't have any time. But the key focus, this is for everyone. This is our current members. This is people who have been looking at this for a long time and asking themselves the question, should I do this? Well, the answer is, if you want to make money, yeah, definitely. Okay, that's the key aim to it. But one of the key things is there's so many strategies out there. I mean, and there's so many different things happening in the market. What we're trying to do is isolate the best trading opportunities. Okay, and if you can get that understanding and capital management under your belt, well, then you're going to have a fair chance of becoming a successful trader. But what you're doing is you're rolling around with the market and the dynamic nature of the market. But what we predominantly try and show you is the strategies the bankers use, so you can get an understanding, get some structure around your trade plan and your capital management, most importantly, and then attack the market from there. All right, but the general plan is very simple. Okay, buy low, sell high, right? Sounds easy. It can be a little bit difficult once you get going if you don't find those key entry levels. And what we're looking for with the key entry levels, whether it's through technical analysis, through economic data, or central bank announcements and these sorts of things, we're trying to isolate the low risk, high probability trading opportunities. Now, these opportunities aren't in the market every day. What you have to do is you have to be patient to wait for them. And some of these times is when you're at work and you actually miss some of them, and that can be quite frustrating. But sitting in front of the computers all day can be quite detrimental. You need to be fresh in front of the computer to analyze and make trading decisions. If you've been sitting in front of the computer all day, you could actually, miss something that's happening in front of you just because you're too close to see the action. Now, the simple trading strategies. What we're looking for is you need a full toolkit of strategies. Whether you're looking at simple trend lines, whether you're looking at economic data, whether you're looking at Fibonacci's, whether you're looking to scalp the market, there's a whole range of strategies you can use, but you need to have a basket of strategies because the market is different at different times of the day and different times of the week, different times of the month. So having a toolkit of strategies will enable you to take advantage of different market events and circumstances. It will definitely allow you to trade in all market conditions. Okay, so that's the key part to having a bunch of strategies. Looking at your basic technical strategies, your break trade, your range trade, your trend trade, and your false break trade. Well, yeah, they're your core structure. But what you need to do is specialize and look at the market in a particular way to take advantage of particular opportunities, whether they are coming from equity markets, whether they are coming from economic numbers, or central banks for that matter. Okay, so then once you have the plan in place, okay, it's about identifying and executing. You need to get clinical with this. You need to get very tough and disciplined with yourself to make sure that you don't overtrade. And when you do see other opportunities, that you don't hesitate, okay? See the opportunities, hit the market, and start trading. But one key thing that you need to understand, the market is dynamic, right? And that's once again why we do come back to having a basket of strategies and the basic technical strategies for that matter to attack the market and take advantage of these opportunities. All right, now strategies the bankers use, well, these are pretty simple. Intraday strategy, I mean, these are some of the key ones. Search and destroy, which is more around stop loss hunting. Snatch and grab, trading the economic numbers. The Ichiban strategy, more for the Asian session, where you are looking to trade around the Ichimoku cloud. But most importantly, looking at those trend trading opportunities. Okay, and one of the key ones that we've been rolling out of late is the end of day strategy, which most traders should be looking at, especially the ones who have full-time jobs. And that is generally the predominant sort of market or clients that we have. They are working full-time, so you've got to be looking at these various aspects. But one of the key parts to getting this thing going is capital management, making sure you've got the capital management structure, okay, to start attacking the market. The market is aggressive. If you can't attack it with strong capital management, well, then you're sort of generally chasing your tail. And the majority of traders, I can tell you, who have no capital management, they generally fail. Okay, even if you have a little bit of success initially, what it leads to is bigger trading until you come unstuck, no stop loss, no capital management, and you're sort of on a hiding to nothing. Okay, so what capital management is about, though, it's about preserving capital as well as capital growth, managing that capital growth as we go forward, and also managing those drawdowns. If you have ineffective risk management or capital management, then what you'll find is you'll slowly bleed your account dry. Okay, so looking at the capital management structure that we have, okay, capital at risk, okay, the standard approach, if you're looking to be a little bit conservative, you know, risking 1%. And what you should be looking at is making 3%. Okay, 5 winning trades equals 15% capital growth, right? So there's a good cash to be made. Now, what we predominantly look for in normal market trading conditions is a bit more of an aggressive approach, where we are risking around 2.5% of our capital. What we're looking for is 7.5% on a winning trade. Okay, now that sounds pretty aggressive, but if you do have good market conditions and good directional opportunities, then this is where you're going to make a lot of money very quickly. 5 winning trades in this situation, yeah, you could be up around 35, 37%, and it's that quick and simple. Now, obviously, it's much easier to make a bigger percentage when you have a smaller capital amount, but as you can see, you know, if you have one good trade a week, okay, well then you're going to be looking at well over up to 100% per annual return, right? And that's the sort of focus that you need to have as a professional trader. If you want to change your lifestyle and make a living as a professional, then this is what you need to get under your belt. All right, but let's just bring this back into reality. Now, I can throw up, you know, big percentages and all those sorts of things. Let's just have a look at the general structure with a $10,000 trading account, risking 2.5%. Okay, you're risking $250. Now, there's at least 50 fundamental opportunities each month. These are the economic data releases, these are the central bank announcements, and all the mixture of fundamental releases that come out. Now, if you looked at just getting one per week, right, after 4 weeks, you're looking at 30% return. Okay, that's if you're a genius and you didn't have any losing trades. Now, that's not very realistic because you do expect to have a lot of losing trades in amongst the winning trades. It's your capital management, your risk reward ratio, which keeps you focused and keeps your account turning over. So let's just have a look at this. So the 10 losing trades. Now, our simple capital management system is called the 4 consecutive loss rule. Okay, you have your first 4 losses, you would lose 10% of your capital, okay, if you were trading very aggressively. But this is where the drawdowns come in very quickly. You half your trading size, your second 4 losses are 5%, your next 2 losses after that would be 1.25%. So all up, you're losing about 16.25%. But over the course of that month, okay, you've had 1 winning trade per week. After 4 weeks, you're up 30%. So even after a month, and this is more realistic, okay, your net trading result, of course, okay, 30 minus 16.25%, you should be looking at around 10% or more per month, and that's with a lot of losing trades in there as well, okay? And this is where your trading structure comes from. It comes from your capital management. And even if you're having 10 losing trades a month and only 4 winning trades, with that risk reward ratio and capital management, you're looking at well over 100%. Okay, now this is good trading markets and good trading conditions. Now you get varying months where the market does discombobulate, where it does go a bit mixed. So then you may not have as many winning trades and you may not have as many losing trades. But what I want to sort of explain to you is, with good capital management and consistent risk reward ratios, you should be looking for annual returns well over 100%. Now this is trading 2.5%. If you dial it down to 1% and you're making 3%, right? Well, then you're looking at sort of half of this or a little bit less. You still should be looking for well above 50% returns. Okay, and once again, once you have capital management under your belt, right, trading does become fun. You know, gone are the days of you chasing the market and chasing your tail. All of a sudden, you start trading with money you've made, and this is where you start relaxing, start to look, you change your lifestyle, and at all the hard work and all the effort that you've put in to get yourself into a good trading system pays off. Okay, and that's what it's all about. How much time do you need to commit to trading? Well, I would say 20 to 30 minutes a day, right? What you're looking for is you're looking to analyze the market technically. Now, once you get efficient at that should take you 5 or 10 minutes. Then you can look across the board and see where potentially there's some momentum changing economic data releases or not. Okay, and you're looking to combine the direction that comes from the fundamentals with the entry levels that the technicals provide, and that's where the best trading opportunities are. Okay, and you're looking at 20, 30 minutes a day to allocate. It's not a lot of time to get into a good trading system and lifestyle. Of course, there's an educational process in amongst this. At the start, you'll be spending a bit more time looking at the markets or going through and getting that understanding. But once you do have the understanding, 20 to 30 minutes a day is all you need. All right, and that's pretty much where I want to leave off the whole sort of educational side as much as Forex trading made simple, and bring it back into the actual reality of the actual markets themselves. Okay, so what you need to be doing is just looking at the market, looking for opportunities. Now, I'm looking at the European session here, and I'm sort of going to get a little bit expansionary. We do have a mixture of numbers here. There's some French economic numbers which have just come out, a little bit mixed. Okay, that doesn't really provide us too much of an opportunity with this mixed bag, but understanding that French numbers themselves are, you know, minor numbers. It's the German numbers that really make a difference to us, and that's where your direction should come into. Looking at the equity markets and knowing the influence they're having, there's a massive push down, drive down in sterling at the start of this European session, and it's more on the back of the Brexit issue. Okay, and so what we're seeing is a big shift down here in sterling, and it's having a bit of an impact across the board on a number of currency pairs. Now, a lot of these currencies, this is one of the key parts to understanding which currency pair to trade. Now, the major currency pairs that are against the dollar generally correlate. And if you have a look at the situation here between Aussie, Kiwi, Euro, and sterling, they all positively correlate. Aussie's off, 20, 30 points. So is Kiwi. Sterling is off almost 90 points on the back of this sort of geopolitical situation that's driving the markets. This is the one here that is the focus. It is pushing Euro down, but what we are seeing is if I just come back over to the European page, you'll see Euro Sterling, which is going up, and this is slowing the move down in Euro. Okay, that's why Euro is not going too far and Sterling is going a lot further, because this is a bit positive for Euro and negative for Sterling. All right, so there's a number of different things to understand from the different time zones, looking at the various currency pairs themselves. You could be looking at, dollar yen here. Now, dollar yen is off a good way here as well. And you can see there's not too much influence at the moment on the dollar index. This would be a nice sterling yen move. And as you can see, sterling yen is off, well over 100 points. So what we want to do is, if you can get your technical analysis correct, and then start to build some knowledge around the fundamental aspects of the market, then you can isolate the best trading opportunities. To me, at the moment, Euro is a much better opportunity than the Aussie and Kiwi because these currency pairs are trading mid-range. Dollar yen, well, we know this is going to be a good opportunity as it comes up towards the cloud. I'm actually almost more inclined to be looking to buy here, especially with the BOJ sitting under 111. All right, and this is the focus, and the way you should be looking at the market is moving with the market. So as we come into this European session, which has just opened, we are now looking across the major European currency pairs because that's where the major action will be. All right, so this is it. It's a relationship between understanding the currency pairs, all right, understanding the general backdrop of the news, and how that influences the various currency pairs, and then trying to pick off the nicest low-risk currency pairs at the moment. Now, this situation here, if I just blow up sterling, okay, now we've got UK CPI numbers coming out in just over an hour. Now, this situation is going to make that trading opportunity somewhat obsolete, okay? The volatility around this geopolitical event and the fact that the currency is trading mid-range is already telling me it's a warning signal just to beware. So I'll probably sit back and watch sterling until there's some greater clarity around the actual currency itself. Okay, and this is what you've got to be able to identify when the currency pairs are looking good to trade and when they're not. All right, okay, so let's get a few questions rolling there. This is really an ask me anything sort of situation. So yeah, for some of those members, Toddy, I'll come back to your Fibonacci levels tomorrow. That's a really good one. And Mark does look at those very closely in London. He's a bit of a Fibo expert. All right. Okay, John, you've got a question there coming up. I also have David's got a question about the drawing trend lines. Okay. Now, how do we draw these trend lines? Well, let me come back to the Euro just briefly. Now, the trend line progression or drawing trend lines is an ongoing event. As the currencies move around, we're constantly updating the trend lines to sort of find out where those key levels are. Okay, so what we're looking for is isolating the highs, okay, and matching up those with the previous highs. That gives us resistance. And when you're looking at the lows here, you're looking at hooking up with the absolute low. Oh, let me just fix that one up. Okay, and then finding the next low, and that's the start of your support trend line. Now, when it comes to drawing trend lines, you really need to have 3 trend lines to really give it some sort of significance. In this situation here, this is close enough is good enough. This was the previous high before we've just had this recent high. So in Euro on the top side, and this is going back to the very high up here at 117 back in August 2015, we now have a very good resistance line coming in around 113.30. Of course, down here around 112, the figure, it doesn't really come into consideration. But what we do have is we do have a support line coming in down here around 108, sort of 50, 70. But that's in a bit more of a longer term perspective. If I just blow the chart back up, you can see this short term trend line where we've got the starting point down here around 108.40. We've got the sort of second touch here around 110.60. Okay, and then to the current market where it's just broken down, and this is breaking down through 112.40. Okay, you should be looking to get into the currency under 112.30 and looking to stay short as the market comes through. And this is where you can bring in those economic numbers. If we get weaker German numbers, in particular German manufacturing numbers out in about 7 minutes, then we could have a good opportunity to get short Euro here. Okay, John, good question there. What time frame are we looking at our charts? And do we only use one time frame? Well, what we do is, and this is just coming from our banking days, we always only looked at, well, the lowest time frame we would look at is hourly charts, and generally hourly bar charts. We don't really go into the candlesticks that much. I know a lot of sales guys do. who want to tell you a story about what's going on, but we're looking at highs and lows and focusing on those things. Now, if we don't have any technical levels, you do go into, on the hourly charts, we do go into the daily charts and also into the weekly charts, looking for those longer term levels. Okay, and that's where you'll find much longer term levels. And I'll just get rid of these horizontal lines. I wanted to isolate those highs and see where they were. But if I come into the daily charts, and you can see I've got a trend line at the top here, this is the absolute resistance level up around 133.40. So for most trading decisions, we use our hourly charts, but if we don't have any charts there, if we don't have any charts on, or trend lines, I should say, on our hourly charts, we do go into the daily charts looking for the longer term trend lines. These are much more significant and we give them much more credibility. Okay, as you can see, there's a bit of a crossover here with a long-term trend line and a short-term trend line, which is the red trend line. That's why I've given those two trend lines a little bit of a difference there as well. All right, so actually Euro's just taken off here, so there's a bit of movement here. So what we want to be doing is, I mean, this is actually going to make, what we're waiting for is the German manufacturing numbers. Now, Euro has just joined in. As you can see, we do have sterling sort of taking off to the downside here, which is a little bit of a nuisance because it is interfering with this potential data release. One thing that you can isolate, and this is actually just looking at the German numbers, there's a situation here where a strong number may give us a chance to sell Euro at a better level than what we're currently seeing. Okay, I wouldn't be buying Euro whilst sterling is reacting like this. As you can see, Euro sterling is starting to falter there, and that's where that last little move in Euro has come from. All right, so I'll just, as I'm talking to you and answering these questions, I'll just get up my trade station here and just keep this on the screens because I want to make sure I'm giving myself a chance to trade these numbers as we charge through these numbers. So, and this is pretty much what you should be doing is as you go through the, as I said, the various time zones, looking at the various releases, you've got to keep up the speed with what's going on. Okay, if you didn't have any news out or you didn't have any, significant understanding of what's going through the market, how are you to know exactly where the focus is? Now, there's a sea of red here in the equity markets. I can see that. That's obviously putting a lot of pressure on, well, the whole EU for that matter, and these are all European equities. Now, the whole EU is under pressure, and this is coming down to the British June 23rd referendum, whether they stay in the EU or not. Okay, and this is where you want to, keep a close eye on things. So Euro, just as you can see, bouncing back up here to 08 as we await these German numbers. Okay, now there's the flash manufacturing numbers, some services numbers coming out. So they're definitely well worth looking at. Actually, funnily enough, the major, more important German number is the IFO business climate numbers, and this is something you'll learn as you go through looking at the currencies and looking where that focus is, making sure that you do hit the right currency at the right time. So I would think that if this data comes out a little bit weak, we might see a good opportunity to sell some Euro. But in actual fact, if you're looking at this chart, and I'll just get this up here, looking for a retracement back towards this trend line is probably the way to go. Looking to sell back towards 30 would make a little bit more sense. But you can see the volatility here. Now, if this starts to run away to the downside, well, then you may miss the opportunity. It's all about waiting for your entry levels. If you don't get them, relax and wait for the next opportunity. As I said, there's a number of releases coming out here, 7:30, 8 p.m., and then you're coming into the major release for the European session, which is the UK CPI numbers. So there's no need to jump in straight away. If you don't see the opportunity, hold and wait. Okay, so John, just to make sure you got that, we do look at hourly bar charts for longer term trend lines and those bigger trends. We do look very closely at the daily charts and also the weekly charts. Okay, you want to have a bigger perspective of the overall long-term trends, and you're not going to find those in those hourly bar charts. Okay, And that's pretty much it. So there's, and this is all you need to be doing is give yourself the opportunity. If the situation doesn't arise, if there's not a good trading opportunity coming up, whether it's an economic data release or a technical level. Now, this euro has got away on us. I was waiting for the economic numbers to get into this trade, and the market has got away from us. There's no drama there, right? You're not sort of, doing cartwheels, getting all, a lot of performance anxiety sort of through your mind. Remain calm. If it doesn't look good, you don't have to trade it. That's as simple as that. Okay, if the numbers are weak, well, then there may be an opportunity and you put your trade in place. And I'm running with a 25-point stop loss. I'm not looking to go sort of crazy on these things. I've got a small trade size and that's all I'm looking to do. So there's about 3 or 4 seconds to go. Let's just have a look at the numbers. Okay, now there's some positive numbers. The services data is stronger. The manufacturing number is weaker. Now, if I get a situation like this, let me just explain what those numbers are. The German manufacturing numbers, 50.4 versus 50.8. Now that's slightly weaker and should lead to a slightly weaker euro. But then you come back to there's a bunch of releases here. The services data is stronger. Okay, now that counteracts the major impact of that weaker flash manufacturing. And this is about simple understanding. Now, don't forget, there's a little bit of terrorist activity here going over here in Belgium. They've raised the maximum security alert to maximum level 4. Now, this is another thing. So if you see events like terrorism, and this is obviously relating to the EU, and this may be part of Europe, if they have gone to a maximum level of security alert, okay, well then what you want to be doing is probably closing out some of your positions. This is a geopolitical event which can have significant impact both sides of the market, right? This is another warning signal that trading the European session at the moment may be a little bit hazardous. So you can do one or two things: decrease your trade size, or just sit back and wait, or just turn off your computers. Okay, John just come back with another question there. I'm in Australia. As you know, the market moves in the night for me. I use entry orders at certain levels. Would you recommend that? Absolutely. That's actually one of the key things that you want to be doing, John. If I just move T-Rex across. One of the key things that you want to be doing is keeping a very close eye on your technical levels. And once you have specific currency direction and you've got good technical levels, that's when you want to be placing orders in the market and taking advantage of the market conditions. So all you need to be able to do is come through the various currency pairs. If you can identify a clear trend in those markets, well then placing an order, whether it's with the trend or not, is absolutely important. And you should be doing that, more often than not. Okay, when you do make most of your money is when you're not in front of the screens. So even if that's your strategy during the evening because you're asleep there, John, you should be using that strategy during the Asian day, okay, to try and capture movements in the market around those key events as well. Okay, so more often than not, it's a great end of day strategy to be looking at to get into the market and identify the opportunities where you've got good currency direction, you know exactly where the currency is going, you've got trend lines, like the Aussie dollar, for instance. This is a good example. This currency is in an uptrend at the moment. Now, just because it's come off, it's actually come off a little bit further now. I'm looking to buy down here and take advantage of this trend line and the upward moving trend. Okay, so placing an order in the market, you're not going to be at your screens all day, so there's no need to be sort of trying to sit up all night or all day trying to capture these moves. Once you identify the opportunity, put the order in the market and let it go. It's as simple as that. All right. Okay. Any other questions there, chaps and ladies? These currencies are a little bit loose. As I said, one of the key events and this is one of the live markets doing a live presentation, they've got, this is the impact it's having, right? The ECB's NUI hearing at EU Parliament suspended. There's a high alert in Brussels. Okay, to me, this is a a high alert for me to be very aware, even with these large economic data releases coming out in the UK CPI, probably give them a miss. Okay, you want clear trading opportunities, and this geopolitical event is definitely unsettling the market, and it is throwing a spanner in the works, and we could see some very violent rallies if nothing happens, or we could see some very choppy activity if something does blow up from there. But this is you got to wait and see what's going on here. You're seeing gold rally there, a bit of a safe haven, especially around these key events. All right, but this is a very good example, as I was just explaining, that once you know what's going on technically, okay, you can get into the trades, and then once you build your understanding around the fundamentals, you'll know when to trade and when not to. And I would sort of generally think at this point, with these alerts and these announcements, it's probably a stand back and wait and see. All right, guys, I hope that webinar's answered a lot of your questions. It was basically to give you a bit more understanding about how to simplify your trading structure, and then also give you an opportunity to ask us any questions, and hopefully we can build some knowledge and understanding around that, and go from there. So what I would say, just to sort of finish up, if you are looking for sort of more information around trading and everything around that market, give us a shout. Come over to the site. I can tell you what you can do as well. We have finally managed to get the new software in place. So now you can actually either get the complete online course components, or you can buy these course components individually, and you can pay in your own currencies as well, whether it's sterling, Aussie, US dollars, or euros for that matter. And there's a whole range of advanced trading strategies which may be of interest to some of you guys as well. They are for specific trading opportunities in the market, but take a look and see if they suit your trading style. G'day, Nick. How are you, mate? Yes, quick question. All right. The euros just continues to drift a little bit lower there. I'm a little bit surprised. If anything, if I had got into that trade just below that trend line, I've got to say, I would have gone back in there and gone down to, well, I probably would have been out by now with these warnings as well. Okay, so Nick said it's just got a question here too. With our team, actually this is a good question, and it comes back into the individual traders versus looking at funds management. So with our current team, we're up 25% in our capital management. Now, the capital management I went through there too with the Forex Trading Made Simple. This is as an independent speculator. Now, trading funds management, and this is our funds management arm, you've got to have smaller parameters. Bigger funds want returns of around 10 to 15%. If you can get those, then you're looking very good. So the general capital management structure around this is a lot more tighter. It's around, you're risking sort of 0.5% on separate trading opportunities. Now, we had a situation where the team was up around 24, 25% around 3 months ago, and then we had 3 or 4 of our guys actually take a hit on euro on the same day, and we lost about 10, 12% over the course of 1 week. Now, that's just not good going. So at the moment, we are starting to recover back from that, but funds management to private individual traders, it's a completely different structure to your capital management, okay? As much as you love making money for investors, they do not want to see significant drawdowns, but as an individual trader yourself, you do have the luxury, of course, to trade more aggressively, and that's what the training and the capital management system we would determine for individual traders to be looking towards. If you do get upskilled and you get into a professional stage like Nick's getting to, then you are starting to trade institutional funds, and then that's when your funds management, you need greater experience and greater knowledge around capital management, and the expectations of those fund managers to really trim in your trade size, because they don't want to see any volatility and they want very small returns for their capital. But that's a good question, Nick. It's a bit of an overlap between professional capital management. If you are interested in those managed funds, check out Traders GCF. Otherwise, if you want to get some more information around, or actually around specific capital management for that matter, come onto the website. You can get a whole complete capital management structure. And this is, as I said, you can get these individual components here now. There's a whole range of videos in this section, which will take you through every aspect of capital management. All right, and that's pretty much where we'll end it there, guys. Now, just having a look at the, as I said, look at the volatility around these events. We are seeing Euro back up, just under 90 for that matter. It is back above the figure. And as I said, this is going to be pretty choppy going forward. And there are some diversions of flights around Brussels. So just be aware, you probably want to watch your news-wise. I think trading these this European session is probably a little bit speculative at this point with these events going on. But once again, decrease your trade size if you are looking to trade, or just wait. There will be better opportunities when these geopolitical events aren't on. Oh, sorry, Nick, just one other question there. Can you direct institutional capital to traders with performance records? Actually, this is something that Nick, you've come through with some good questions there, because this is something we are looking to roll out. I've got some ex-colleagues of mine that I used to work with at Citibank. They have developed a system whereby you can be rewarded for your trading strategies and start to get rewarded by managing some institutional capital. What you should come over to, have a look at Coalface Capital. We are running a London Traders Conference in about 2 or 3 weeks, and one of my good friends at Coalface will be doing a presentation. Have a look at that site there as well. We are starting to direct clients to institutional money through a few of these various feeding companies, and that's where you can also, all your hard work and putting in time to learn how to trade and manage your capital will come to the forefront. Once you do get some track record, you can end up setting up your own CTA or managed account business. Or if you don't even want to go that far, you can start to tap into another industry where you can get institutional money and start making more money yourself. Okay, we've got a lot of connections here, so give us a call or contact us on our email. If you come down the very bottom here, you'll find our contact details. You can give us a call on one of the numbers, and we can hopefully direct or answer your questions or direct you to the various site that you need to go to. All right, guys. Well, thanks very much for joining us. It's been a pleasure to present. Some good questions there, and we hope to hear from you soon. For those members, we will be having an Ask Me Anything webinar. Everyone should get access to that, and we are going to start to nut out a lot more about what's sort of going through the market and looking for those nice, easy trading opportunities. All right, guys, thanks for joining us. We'll catch you later on. Cheerio.